we're looking favorable. But this is the market breadth, of course. Nearly 3:2 in favor of the advances and has pretty much stayed the same for a better part of the trading day today, aside of starting off at a material high and then cooling off a little bit. But still, 3:2 is something that you would take with both hands. So 3 days on a trot now, we've had a bit of a rally, even though the Nifty is lying flat. Bring up the Nifty gainers and losers though. And you can see even Siemens now in the morning, it was all about the gainers. Now, two-wheeler stocks, for example, have pulled back a little bit, and that might be putting a little bit of pressure on the markets. HDFC Bank, principal culprit, 1.5% down, putting pressure on the markets as well. And look at the list of losers. So iShares is down, Bajaj Auto is down in trade today as well, Tata Motors. So autos have faced a bit of a stick in the session today. The top contributor, of course, is HDFC Bank. If you shave off HDFC Bank's losses, then the market's actually well and truly in the green. Reliance is flattish in trade, and FMCG is taken a bit of a backseat today, at least the bigger ones like HUL and Nestle have. So therein lies the issue, if you will, mainly HDFC Bank. On the gaining side, Cipla, 3.5%, the promoter stake sale digested well. Some bit of PSU flavor with coal, power grid, NTPC, BPCL. Pretty similar to yesterday where old economy did really well. Bharti Airtel posted results about 1.5%, and some gains for an Adani Enterprises and L&T as well. So some bit of infra flavor too out there. But in some sense, a bit of nothing to the Nifty at least in terms of movements. But Tamanna, broader markets, you can't find a fault really.
Can't find a fault, but I would say, Niraj, this is a bit of a struggle today between the bulls and the bears. It's not a one-way kind of a movement, and some solace in the broader markets, like you said, on a relative basis. I mean, close to 1% up on a mid-cap 100 is good. I don't know if I would cheer about it in relative terms. Yes, the small cap 250 also looking like it's about 1% up. All about the results. If you go and see what is working and what's not, and we've picked some of those stocks. I also, towards the end of this segment, want to talk about TBO Tech and the new listings, Aadhaar financing as well. But let me start with Thermax. Now, the inclusion in the MSCI has worked well for Thermax, 8% up, and it's had a fantastic run since the get-go, since the first opening bell. Thermax has been one stock to watch. Siemens, likewise. Siemens has had a fantastic set of numbers, huge set of numbers, and following what we've seen in terms of ABB, so Siemens also doing well today, 7% up in trade. LIC had an interesting reason for an uptick. Now, this was widely expected that they would get reprieve from SEBI, so they've got a 3-year extension to achieve their 10% public shareholding, the additional part that they have to. So LIC has also had a good day. If you can just pull up LIC there, 5% up today as well. Oberoi Realty is the other one. Good set of numbers. At least the street seems to have liked it. So that stock doing decently in trade all through the day, 4% up as well. Now, on the other side, I have to talk about Colgate, and this was a bit of a surprise because Colgate's numbers are actually pretty good. They've had their highest ever EBITDA margin. It's a beat on all aspects. Perhaps the only thing that could be worrying the street, one assumes, unless there's profit booking, is that quarter on quarter their gross EBITDA has come off slightly. And that could also be a base effect kind of a situation, but nevertheless has given enough of a reason for the stock to take quite a hit. The con call also seemed fairly positive, so not very clear why there is this kind of a sulk on Colgate-Palmolive in trade today. Aarti Industries is the other one that I wanted to bring up. So UBS had an extensive note on the chemical pack. We'll play that out for you and we'll get you details on that as well. But one of the sell calls very clearly was an Aarti Industry, 4.5% down on the stock. Archean Chemicals also, part of the same story where there is not too much excitement in this space. That pain still persists fundamentally, and Archean is also bearing the brunt, 4.5% down in trade today. Devyani International is the other one that I wanted to talk about. We put it on your radar this morning as well. A couple of downgrades from brokerages. Not too much excitement on Devyani International, and that space, that QSR space also hurting. Let's talk about 4% down. So all in all, it's all about the results. I want to pull up the two listings of today. So TBO Tech and Aadhaar Housing Finance. Aadhaar is actually recovered. I know it's looking like a poor country cousin of TBO Tech when you talk about listing premiums, with TBO Tech about 53%. But Aadhar Housing Finance had opened quite iffy right at the start. That was also 28 times oversubscribed. So at least investors in the primary issue are walking back with some kind of gains in hand. TBO Tech, of course, is a different story altogether. More than 80 times oversubscribed, and that stock 53% of listing gains at least. So not a bad day, Niraj, for the two new listings as well, and for the markets overall. But I would say that if we're saying we're out of the woods as far as market nervousness is concerned, that would be premature.
Most certainly, and that's well put. And let's actually pose that question to our guests today. Both on the technicals and the fundamentals. Aditya Arora to talk about the technicals, and Nirav Asher to talk about the fundamentals. Gentlemen, thanks so much for taking the time out, both of you. Aditya, what's your sense? It's a day of consolidation if you look at the large caps, but the broader markets are having a rock solid day. Do you think the uptrend continues, or would you believe you would want to take a pause?
Very good afternoon to you and to everyone. I think it's better to take a pause right now because the markets are all over the place, and there are enough positive signs, enough negative signs. So probably we couldn't draw a conclusion where market is headed. If we talk about derivatives data, then FIs are extremely short on the market. Now, this has two consequences. Either market could have very big short covering rally, or second consequence is that if we have a breakdown, then market can move down significantly. And along with that, we have India VIX at 20, which has recently jumped from almost 10, 11 levels to almost 20. So that signifies we can have a huge move of about 500 to 2,000 point in 1 month time frame. We also have elections coming up. So it's better to take a pause when we talk about large caps. And in small cap pockets, I think stock specific moves will continue because there's less dominance of international FIs in that case, because if there's a good domestic news flow, we see a lot of stocks jumping up. So we can take stock specific bets on small cap and mid cap space. In large cap space, I think one should be a little cautious and take entry where risk reward is very good. So recently when market fell, it was a good opportunity to accumulate the stock. Now we are trading in the median zone. So it's better to wait and watch and wait for either a breakout or a breakdown in the market.
Okay. So in which case, what are those stock specific bets that you are making today, Aditya?
Right. So I have chosen two stocks today. One is Indian Bank. Clearly, PSU Bank space is dominating today in the market, and they have PSU banks are one of the top gainers today. So that is accompanied by good volumes. One can trust this candidate. It's a bullish candidate. Indian Bank could be bought at 538.50. 514 should be the stop loss, and 590 to 650 would be the target. And second one, LIC, as everybody is talking about, good gains in public sector banks just ahead of the election, because we saw a good, sentiment booster a few days back when, Nifty was almost trading at swing low. So I think PSU space could participate very, we can see a robust rally in PSU space. So LIC is a good buy. LIC Insurance at 976, 928 should be the stop loss, and target should be 1050.
Nirav, hi, good afternoon. Tamanna here. Wanted to get your take on Colgate. Colgate-Palmolive numbers looked good, but the stock has taken quite a beating. Do you think this is a bit of profit booking coming in once, the details, etc. are out, or is there anything to be concerned there? 5% down now on the stock.
Yeah, good afternoon, and thank you for having me on your show. In the case of Colgate, I think we've had quite a decent run-up in the last few quarters. And I think some amount of profit booking or some amount of correction was quite overdue. So I don't think there's any fundamental reason for a fall in the price, but I think it would be plainly attributed to profit booking at this point in time.
Okay, so just profit booking on Siemens. So just quick take from Aditya on Colgate before we move to our stock of the day. Yes, Aditya. Do you think Colgate has potential for a buy right now?
As we have seen recently, FMCG is getting a new life. Recently, there's a good buzz in that sector, but Colgate Palmolive is clearly underperforming. So I would say that FMCG sector can do well. It's a component of FMCG sector, so it can do well. But there are other peers who could outperform Colgate. So I would say that one can accumulate this stock. It's not a breakout buy, but an accumulate at this level of 2670, 2650. This is the support for the stock, and stock could bounce back towards levels like 2750 and 2800.
Okay. So it could bounce back, and it seems like profit booking at this point, according to Niraj as well. But let's shift focus to the stock of the day, which is clearly Siemens. The company's net profit nearly doubled on a year-to-year basis. Of course, the rest of the numbers also looked good. There was some kind of a push forward of orders coming into the next quarter, but that doesn't seem to have bothered the street. Puneet is joining in with more details on what has worked for Siemens and what our brokerage is saying today, Puneet.
Yeah, that's right. So the stock is also reacting very well on its numbers, had an intraday high of roughly 7%. This was led by strong revenue performance, roughly 18%, as well as EBITDA growing roughly at 41% compared to the previous year. The company saw strong optimization of cash, and they've said that operating leverage has been one of the key instruments here to the strong profitability, up 70% compared to the previous year, the size of Siemens. So profitability came at roughly 803 crores versus 403 crores at the same time last year. The other key highlights of the result was that they maintained a strong order book for the quarter. New orders worth 5,184 crores was received by the company in this particular time frame, and this is key because they had said the previous commentary that they will be around the 5,000 crore per quarter of new orders, and they've maintained that as well going forward. Profit was driven by high volumes as well as strong productivity for the company, while growth was led by the cost optimization, as we mentioned. There was one key highlight that the company mentioned was a deferment of large orders, which the company has stated to bureaucratic issues in the industrial automation segment. That's what they said, and they say some recovery in this particular segment post-elections as well. Company has also announced a plan for demerger of their energy business. They have said that this business will be listed on the BSE as well as the NSE somewhere around the second half of next year. The company will be having a 69% stake in this new energy business, which will be listed, as well as the new energy business will have a new CEO as well as a separate COO from the Siemens India business. Naturally, brokerages are also very positive on this. Jefferies has a target price of roughly 8,000 rupees per share. They've increased this from roughly 5,500 rupees previously, which has led to a strong upside also from current levels of roughly 21%. They have said that the company has increased its capex every year and currently is higher by 50% compared to the last 7 years, while additional capex has been announced in the newer segments of smart infra as well as the industrial, the train manufacturing facility as well. Transmission orders have been key according to the brokerage, and large orders post elections is one of the key things that they are watching out for. The same is echoed by Nuvama as well, with a target price of roughly 7,700 rupees, which is roughly a 15 to 17% upside from current levels. But overall, strong show by Siemens. Brokerages have also given them a thumbs up. Back to you.
So strong show by Siemens. The stock is doing fantastic in trade today. Just want to get Aditya's view. Aditya Arora, more steam left in Siemens?
Yeah, Siemens is a good buy if one is, buying for a swing trade. But on the long-term time zone, I think the stock is very overbought. There could be a likely correction of about 10 to 20% if we are looking at 3 to 4 months time frame on this counter. But if one is looking for 1 to 2 week kind of view, then probably the patterns are bullish right now.
Nirav, what is your call on Siemens? And let me throw in an ABB and the entire pack.
Well, I think the trio of ABB, Siemens, and Thermex are a buy at every fall. They should be accumulated at every fall. Reason being, all of these are pioneers in technology. If one were to look at Siemens, then I think they have benefited immensely from the T&D segment, that is the transmission and the distribution segment. And if one were to read the commentaries of the different companies, there could not have been a better time for the T&D sector than now. That's been reflected in the prices of various transformer stocks, is reflected in the prices of Power Grid Corporation, and a whole host of companies in this space, that is the T&D space. So Siemens benefits from this. Apart from this, they are masters in the signaling technology as far as the railways are concerned. So there is a clear-cut technology play over here, and the pioneers in this space definitely are going to benefit. As far as ABB is concerned, they are pioneers in electrification and process automation. They are also doing very well in the robotics space and industrial automation. So I think all this is a no-brainer, and I think all these three stocks should be accumulated at every firm.
Okay. Just before we take that break, some flashes on your screen from the Bharti Airtel core call Gopal Vittal saying about how they need to do more work in the broadband services, yes, and India Mobile and the split between India Mobile and the total business, non-mobile business as well. But they talk about how rural market continues to grow exponentially, and how while that is the case, the company may roll out about 25,000 sites this year, which is lower than what they did in last year. Remember, the numbers were lower than estimated on the bottom line front because of the Naira devaluation which had hit. But as the con call has progressed, the stock has shown a bit of a spike and is now up about 1.8%. So pretty good going there. They have the highest ARPU. The question mark only is, do they believe that they will clock in more ARPU in the near term? They've always expressed the desire to do that. Are they able to do it or no is the question. But something has excited the stock, which has been said in the con call, presumably because the stock is starting to perk up just a little bit. Hold that thought on Bharti Airtel, of course. We'll be back in just moments from now from a short break. Maybe talk a bit more about Bharti and some of the others. Indus Tower, remember, is also in focus because of the MSCI inclusion. Stay tuned. Back with India market close and flashes on your screen, as we said, Airtel nudging the day's high. So that stock seems to be doing okay. The indices are absolutely flat, ready to bob into the green again. So bear that in mind when you're looking at the Nifty per se. The broader markets anyways have been strong. Hemant Shah, fund manager of Seven Islands PMS, joins us right now on the show with his thoughts. Hemant, good having you. Thanks for taking the time out. This is Niraj here. Good afternoon. Hemant, how are you approaching investing in the current scenario? Are you taking a foot off the pedal even if the opportunity is presenting until the election result is out of the way? Or is that not holding you back if you see an opportunity?
Hi, Niraj. Thank you for having me. And let me start by saying that I've been watching you since so many years, and I'm really happy to connect you on your show. So thank you for having me. And yeah, as you said, I think we are positioning ourselves quite slowly, but in terms of buying, and we take this, I think, fall as an opportunity to buy. I think it's just, I would say the election is just an exercise. The result is known, quite known and quite obvious, but still there is ambiguity and there is uncertainty. And that's why there is a little bit of, jittery in the market. But I think we are taking it as quite positively, and we are positioning ourselves positively, but slowly.
And in that light, what is, okay, so let me try and think, what has impressed you the most, for example, let's say in this result season, because we've seen,
Yes.
the pockets of outperformance are known. Autos have done well. Selectively, some of the commentary from the chemical companies is looking okay. But we don't know your portfolio,
Yes.
so just trying to understand what has impressed you the most from this earnings
Yes.
season.
So the earnings season has just started, and I think I'm quite impressed with the manufacturing sector's performances. You take a look at all the capital goods companies, whether it's an MNC or whether it's a Indian multinationals, they've posted really fantastic numbers, and I think it has surprised everyone. Say, for example, SKF or Timken India, by that matter, and they've posted amazing results. Thermex, even at this base, they've posted so brilliant numbers. And I think the manufacturing story in India has just begun. It's just a pause, maybe before this election and all. But I think I would be very happy to see the same government coming with the same momentum of growth for the India. So what has impressed me is the India growth story, Niraj.
Okay. Hi, Hemant, Tamanna here. Great to have you on NDTV Profit, and let's talk a bit about that. Let's talk a bit about that growth story, which has been the recurring theme, I would say, in the markets for the last few years. Now, how would you play that India growth story when it comes to ahead of June 4th?
No, I think June 4th is just a date, I would say. So barring 2 weeks before and 2 weeks after, market will take its own course. I personally feel so. India's story is much bigger than June 4th, I feel. And I think the ball is rolling in terms of the growth and the capex and the policies of the existing government. For example, the highest spend in infra, highest spend on railways, Make in India policy, all this augurs well for the coming few years for India, actually. Only, I think we are just hoping that the same government comes in play and continue the momentum of the growth and the policies.
Have you been nervous? Have you been, when in this last 1 week when we've seen these election jitters and nervousness, etc., how have you looked at it, Hemant, in terms of your trades?
No, we have been actually quite sitting a little bit on cash, but we have already started deploying some of the cash, and we will be investing in tranches.
Where are you deploying? In the sense, if you can give me some sectors and stocks that are working for you. Are you liking defense? Are you liking railways? Are you liking capital goods?
Capital goods. Specifically capital goods. The valuation in defense, I think, is quite far beyond my understanding or my reach for the time being. But capital goods and manufacturing sector, we are quite interested in investing, and also started investing. And one sector, which is, of course, a sunrise sector, is solar, where we have already invested. We are not selling, in fact. We are just sitting tight.
All right. In cap goods, yes.
Having said that, barring we are also looking now to invest in few large pharma companies also. So they have also performed quite well, the large pharma companies.
Hemant?
Yeah, Tamanna.
Okay, what is giving you comfort about Cipla and what else are you liking in the pharma pack?
No, I think the comfort is the numbers, the growth potential, and the cycle of the pricing pressure is, I think, we might see, we are at the end of the tunnel, I feel. So we'll be back to normalized pricing, normalized business growth, and exports growth, which has been a little bit lower. But I think going forward, we will see good growth in exports as well as pricing. So stable returns, stable numbers, and better growth in exports, I think attracts me particularly for Cipla.
Anything in the, large pharma is US generic based or some of the others like CDMO or some of the healthcare names as well, Hemant?
No, I think few mid-cap pharma we can look at for CDMO play, I guess, but not the large pharma. Frankly, no, not yet, because the valuations are quite high in the CDMO space.
Okay, well, because Airtel is poking up, I think there is merit in just cutting the con call which is on right now and hearing out Gopal Vittal as he speaks about the year ahead. Let's listen in.
When the chipset shortages hit us and when chipset prices went up sharply, that led to increase in smartphone prices. The entry-level smartphone prices at the time used to be about 5,000 to 5,500 rupees. That suddenly shot up to 8,000-9,000. And we had conversations at that point as to the slowdown in upgradation. And I mentioned that it takes, in any consumer market when there's a price shock, people take time to absorb the shock. Because somebody who wants to upgrade a feature phone from a feature phone to a smartphone comes into the outlet, suddenly finds that the price has gone up, goes back. But then the next time they come around, they're determined to actually buy it because now they're used to a new reality. So I think that's what you've seen in the increase in smartphone shipments relative to last year. That has obviously benefited us somewhat on smartphone additions. The overall REC additions that we've seen, the revenue earning customer addition that we've seen, is a function of the large-scale rollout that we've done. I had mentioned that in many places that we are going, where we are expanding, our shares are very low or almost non-existent. So to that extent, there has been some pickup on customer additions as far as that's concerned. On tariff repair, how much can be absorbed? I would say, we've seen several rounds of, actually 2 rounds of tariff repair in the last couple of years. And that has led to some SIM consolidation. Every time there is some increase, there is some SIM consolidation that happens. I would say at best it's modest. The upside benefit of the repair is much, much greater than some SIM consolidation at the lower end. The fact is that the digital and mobility today has become so essential to people's lives that people will adjust their spends to deal with any increase. But the quantum of increase will need to be determined. Obviously, it will not go in one shot from 200 to 300. That's not going to happen. But it will have a couple of rounds to actually get there. And so let's see how that plays out.
Thanks, sir. And just in terms of timing, do you think annual tariff hike is a possibility? Like in the past, you've done say one tariff hike every 2.5 years now. Do you believe that it can be quicker now?
Well, Kunal, I think this question is being asked in different ways. I think, I can't comment any more than what I've already done.
Okay. Just second last question on home broadband, slightly muted.
Sorry, Kunal, I think we lost you.
Kunal, you may please unmute your side, introduce yourself and ask your question now.
That was a snippet of the Bharti Airtel con call, and as usual and as always, the big question is always about tariff hikes. When, how much, The reiteration of 300 rupees has been made in that call as well, saying that ARPU at 300 would still be lower. But the feasibility remains a question mark. Hemant, what is your take on Bharti Airtel? Do you think they're better placed than peers, and how big a factor is tariff hikes?
I think, Tamanna, I'm very positive at Seven Islands. We are very positive at telecom sector per se, right from the service providers to the hardware manufacturers also, because we see a huge opportunity in terms of transmission to 5G and going forward to 6G. And with respect to Bharti, we are again positive, and I think I'll have a disclaimer that we might be holding for our clients, Bharti Airtel. We anticipate some price hike, ARPU, as the management always reiterates. I think the speed of increase will be little bit faster, increase in the prices and ARPU, what we have experienced in the past. So in future, we see very much possibility of a decent price rise.
Hemant, just before we wrap up, would Bharti be the better bet, or would Vodafone Idea, in which there has been substantial institutional investors and it's coming back of sorts like a phoenix, be a better tactical investment?
No, I think Bharti, we would be putting our money in Bharti. Right?
Got it. Okay. Hemant, lovely talking to you. Thanks for taking the time out and being with us on NDTV Profit. Look forward to having more often.
Thank you, Niraj. Thank you. It was a pleasure to have you.
The pleasure was ours. Before I take that break, Aditya, just one quick word. Bharti has been about this 1.5% to about 2%. Would you believe there could be a trade here in Bharti Airtel?
I think the stock is consolidating, although it has broken out of its range, but there isn't much reaction to the news. So I think one should wait, for a good upside. So the breakout will only happen above 1350 when there could be a big dash from there. Right now, the stock is in consolidation. So we'll wait for more signs.
Okay. Gentlemen, stay on. Lots more to talk about. We need to slip into a quick break. We get you some buy today, sell tomorrow ideas, as well as cues from the derivative market, from what's happened in the MSCI and the resultant impact, and maybe a couple of sectors like auto and auto ancillaries on the back of brokerage notes. Stay tuned.
welcome back. Market's just about trying to hold on in negative territory, not massively though. Nifty Bank, I would say, is the hardest hit, about 0.5% down. Broader markets doing slightly better. But let me go across to Agam, who's now breaking down the F&O cues. Agam, the pain points visible?
Well, actually, it's been a confused sort of a day because while earlier on in the session, we saw a little bit of an up move, again, a correction. And then since then, there's been a lot of uncertainty with respect to not just the benchmarks, but also the broader markets. And, for now, the Nifty remains flat. And not much movement here either, not much change in open interest either. It is, let's talk about the Bank Nifty then and see whether or not there is in fact a big change there. We haven't seen no spikes whatsoever so far on the Bank Nifty. It's down by around 0.4%. Earlier on in the session, we saw just a slight bit of weakness coming in. But since then, there has been not as much movement, though the futures has added another 9% in open interest towards, well, we can't exactly determine whether or not that's towards the long or the short side. Perhaps time will tell us that. But for now, as far as the Nifty open interest change is concerned, again, all over the place, as you can see from your screen there. We move into a weekly options expiry for the Nifty tomorrow. And along with that, we're seeing a lot of traction around 22,200 and 22,300, also on expected lines, because that's exactly where we saw the Nifty trade, around. And that leaves us with your overall open interest distribution. 22,500 still the mark with the most amount of open interest. And of course, on the downside, we are keeping an eye on 22,000 and 22,200 as well. If I need to come and talk about stocks, let's actually take a look at, so a lot of shorts coming through for Canara Bank, Granules, Shree Cement and Colgate. And Siemens, of course, continues to climb in today's day of trade. And in terms of stocks, we're just seeing unwinding. UPL does see some amount of short covering. But I really wouldn't want to go ahead and, classify any of the other stocks like Escorts, Astral, Muthoot Finance or Sun TV, simply because that underlying hasn't moved substantially in today's day of trade. Overall, well, I would say it's a mixed day of trade, and the question really is that does this uncertainty play out and for how long? We are going into the final leg of the earnings season as well. I reckon a lot will be determined post that.
All right, thank you for that, Agam, there with the breakdown of where the F&O trade sort of stacks up. Let's get back to what's happening on the cash side. And LIC, Coal India, PFC, the entire PSU pack is having a superb day on an otherwise, I would say, non-committal kind of a market. HAL, second good day in a row, Oil India, Power Grid, IOC, all of it actually, all the PSU pack doing very well. Nirav, do you see this more as a sort of pre-election, pre-next budget kind of a bet? And where would you see your top picks coming in the PSU pack?
Well, yes, I think we've seen in the past few days all the pet themes of this government, all the themes which are very close to this government, like railways, defense, or the Adani Group stocks, realty, etc. They've all performed quite well in trade, and there's been a kind of a confidence which we have seen in all these counters. So I think the power-related space, the renewables, the defense stocks, I think they continue to do quite well. And I think the focus will be on the select railways and defense-related stocks.
Okay. Yeah, some stocks which have moved up. I wonder if Bombay Dyeing has had a recent move, but just pull up the intraday of Bombay Dyeing. It's up 10.5% if I'm not wrong. Not in the last few minutes, but certainly has had a good move today. There is strength in ITI throughout the day. In fact, if off the highs of the day, but still doing okay. And Shipping Corporation of India, amongst the best performers from the PSU basket, YTD is up around the 7.5% in today's session as well. So some pretty strong showing out there. Nirav, some of these shipping and shipyard related companies have had a very good last couple of days. Yesterday, from everything from a Cochin to a GRSC was active. Today, SCI is doing up. They're not related businesses, but they seem to be doing okay. GE Shipping was up yesterday as well. Do you guys track these two spaces fundamentally?
Yeah, we've been looking at the defense shipbuilding stocks, and there has been a lot of thrust on indigenization. They have also achieved a lot of progress. And yesterday, of course, the Muscat dock related developments, what we have seen, certain announcements which have been made, have augured extremely well for the markets and for these stocks. So I think these stocks continue to perform well and are likely to perform well in the near future.
Well, but SCI is certainly standing out in the session today. Very quickly, Aditya, on the charts, how does the Shipping Corporation of India look? Alternatively, even a GE Shipping, which may not be so active today, but was very active yesterday.
Yes, chart patterns of SCI looks good. Shipping Corporation of India. One can accumulate this stock at current levels of 224.70. One must maintain stop loss at 203 and target would be 245 to 255.
Okay. Well, watch out for this one as well. And, some of the stocks like Thermax are up today because of the changes that have happened in MSCI index. Now, that is well established, right? Mihika came in the morning and spoke about this as well with the review to the changes. In some cases, it's the weighted change. Mihika Johnson with the fine print of some of the details around this. Mihika.
Yes. So 13 Indian stocks added to the global standard index of MSCI, and the changes will come into effect by May 31st. Under the emerging markets index, large cap additions include counters like JSW Energy, Canara Bank and Indus Towers. Under the mid cap segment, we have Mankind Pharma, Bosch, NHPC, Solar Industries India, Torrent Power, Thermax, Jindal Stainless and Sundaram Finance. We also had certain stocks that were upgraded from the small to mid cap index, which is Phoenix Mills and PB Fintechs, and certain stocks that were removed, and that's Berger Paints, which was removed from the emerging market index. And was when you talk about Indraprastha Gas, 197 Communications, which is Paytm, they were downgraded from the mid to small cap index. Now, according to Nuvama, they expect $2 billion of passive inflows into India post these new rejigs. Now, they expect India's weight in MSCI's emerging markets to move from 18.2% to 20%, and they expect the highest inflows to the tune of $229 million for Indus Towers, and they also expect high inflows for Sundaram Finance, Torrent Power, Solar Industries India, and the Berger Paints exclusion to have an outflow of $109 million. Now, when you talk about the biggest movers on the back of these inclusions, now Thermax was the one that stood out, 14.6% intraday high. We had PB Fintechs and JSW Energy both up to an intraday high of 6.2% and 5.9%, as well as a Canara Bank up 4.9%. Some of the stocks did have some weakness today. That was Bosch, intraday low of 4.1%. Solar Industries was down 3.5%. And we had a Mankind Pharma, which was included in the mid-cap segment, that was down 3%. But it's key to know that Mankind Pharma numbers are also due today.
Okay, well, and some of the stocks, as we discussed, Thermax as well, have had a really good move on the back of this too. Mika, thanks for putting those into perspective. Well, the market has been about gainers today, and a clutch of them have done really well, but you shouldn't take your eyes off some stocks which have had a bit of a pullback. So Aarti Pharma Labs, and I don't know if it's got the con call piece to it, because it did well on the day of the results. In today's session has come off 5%. I think the growth guidance and the margin guidance wasn't the strongest. Colgate, for all the rural commentary optimism, and frankly the results beat as well. The stock unfortunately is down 5% in trade today. Did well at open, but I think came off quite rapidly. And in Aarti Pharma Labs case, even Aarti Industries has come off today, 4.5%. There was of course this downgrade that came in from UBS, or rather the target price which was lower that came in from UBS, which might also have played a part here. But these few names have certainly come off. Actually, Colgate surprised me, because I thought the performance and the commentary around what could happen in the rural growth and the fact that so many people don't brush in the country made me believe the stock could do well.
That was to me the most interesting thing from the investor presentation that I saw. 20% of households in urban India brush twice a day. Most brush just once, but that's still better, because according to them in rural India, 55% households don't brush daily. So perhaps they're using the sticks.
Floss? Not brush, but floss.
Datun. What is it? Datun, or the neem sticks, or more traditional methods of oral health care. But I think Colgate, the only fly in the ointment that I could see, and I looked at those numbers quite closely, was that Q on Q, their gross EBITDA margins did come off. And the word from the management seems to be that that's because it's a very high base. You had 70% plus gross EBITDA margins in Q3 and a tad less in Q4, about 67%. So that is the effect of a high base more than anything else. But all things said, your oral healthcare, the space has turned in Q4. Rural has outstripped urban in Q4, and they seem very positive about it. And plus, so many people that you have to bring in to brush twice a day.
If that statistic is to be believed.
No,
yes.
Just another tidbit from their con call. The average replacement rate of a toothbrush in India is 9 months. What it should be, that means you change your toothbrush every 9 months. You should, as per dentists, do it every 3 months. You should throw out your toothbrush and get another one every 3 months.
I do it way earlier, I must say. But anyways, those are separate details. Let's talk about the stock, if you will. Niraj, Colgate has not been a bad stock in the last 12 months. There's a negative reaction to what seemed to be at par or slightly better than average numbers. What do you think an investor should do here?
I think at least it's been a very good performer in terms of the financial performance, operational performance. But I think at this point of time, we are seeing a profit booking in the stock. So I think it's better to be on the sidelines, wait for the correction to get over, and then only enter into the stock. Because at this point of time, I think a lot of things have been factored into the price. Now, all these factors about oral hygiene, etc., they have been reiterated time and again. This is not something new which has been coming out in their presentation. It is repeated quite often. So I think can't read too much into it. Have to wait for the correction to get over before entering this stock.
Just another stock that has caught my eye is BSE. What a day BSE is having. And let's just pull up that intraday chart to over 6% now. And that spike actually in the last few minutes. I wonder if any sort of trigger there that has come in. But BSE doing fantastically. Aditya, is there something on your radar?
Yeah, absolutely. I think that looks good. You have found a good stock which is about to make an attempt of breakout. So one can buy BSE at 2853. Stop loss must be 2700 and target would be about 3000 to 3100.
Okay, so BSE you like, FACT is doing well, CG Power is doing well. A lot of interesting plays today. Sona BLW as well. Nirav, even as auto remains in the favorites list, the auto ancillary space seems to have more potential perhaps. Do you like a Sona BLW?
I feel Sona BLW is good, but it's expensive at these levels because while they have a very strong order book, they have an order book which is approximately 8 times the FY23 revenues. But I think the execution has been a bit too slow. There is a focus on electric vehicles. There's a lot of thrust on electric vehicles. But I think the valuations look very, very stretched at this point of time.
Okay. 604, up 4% today. I think the 52-week high is actually even higher for Sona. But interesting. Let's see how they deliver. But yeah, the multiples, I take on board Nirav's point, the multiples are very expensive for Sona BLW, so you got to keep in mind it's virtually done nothing. In fact, has come off in the last 1 month, and over the 12-month period as well, hardly any gains. Look at that. And this is what happens when the stock is very expensive. Sometimes it just fails to deliver, and that's what Sona BLW has done. It hasn't just delivered in the last 9 months. I mean, 9 months, 10% return, you wouldn't have beaten the index, I believe. So that's the key point. But sticking to autos, tomorrow we'll see Mahindra and Mahindra report the numbers during market hours, I might add. Puneet joins us with what the street is expecting from NMM. Puneet, good afternoon.
Hi Niraj, good afternoon. So we are expecting a decent quarter from M&M on the back of the strong sales that it has reported in the quarter. So on revenue, it's expected to rise to roughly 24,000 crores of revenue, which is up 6% compared to the same time last year. When you look at the EBITDA is expected to rise by 9% to come in at roughly 3,000 crores, which is above the 2797 crores that it reported in the previous year. And on margins, they are expected to be somehow stable around 12.7% range. This is up by 30 basis points compared to the previous year. Finally, on net profit, we are expecting a beat year on strong operating leverage playing out. Net profit is expected to rise by roughly 17% to come in at roughly 1,800 crores. This is compared to 1,548 crores that the company had reported in the same time last year. When we look at the sales for PV specifically, the sales have been high by roughly 15 to 20%, coming in at 1,26,000 units sold in this particular quarter, while the CV business, which also includes the three-wheelers as well, that has shown strong performance, coming in at roughly 89,000 units. And finally, the farm equipment business, this has fallen by roughly 5 to 7% for the quarter, coming in at roughly 71,644 units. What will be key by the management here will be the commentary going forward on the farm equipment space and the tractor space in general. We've seen that there were a couple of festivals, so we'll check with them on how the mood is going forward, what kind of inventory the company is also maintaining. And Motilal also came out with a note as well, where they are positive on M&M going forward. They see that the large underperformance that the stock had pre-COVID is somehow post-COVID has seen the recovery and is expected to sustain for the next financial year as well. So overall, a decent set of numbers expected. Commentary is key here. Back to you.
Okay. Thanks, and we'll watch out for this stock. I must say, from amongst the auto names, we know that Tata Motors takes the cake when it comes to the kind of returns that auto stock has delivered. But I must say, M&M hasn't been too bad either. If you look at the 24-month period, it's done reasonably well, one would reckon. 12 months, about 76%. Not too bad. Okay, 6 minutes left. Good time to get in closing strategies first. Aditya, you gave us a couple of stocks at the start of the show. Some may have moved, some other stocks may have come in. If you had to choose one strategy, a BTST or STBT on one stock, or the index maybe, what would that be?
I would choose a buying position, and my bias would be bullish bias. So I have bullish bias on BPCL. That looks good. After doing consolidation for a while now, this stock looks good for a breakout. So this could be bought at 627.55, and stop loss would be 607, and target would be 649 to 670. So this one looks good. And I think oil and gas space is buzzing today. We can see movement in Petronet as well. So one should keep oil and gas space on radar. I think tomorrow there could be some good volatility on the upside in these counters.
All right, BPCL looks interesting. That entire pack actually is maybe the next big area. But I want to come back to some of the the auto companies. And Nirav, we briefly talked about M&M, but Tata Motors, Maruti, any of the OEMs that you also find interesting?
I find the two-wheeler space interesting, and I think we've seen some stellar performances coming in from Hero MotoCorp, TVS Motor Company, as well as Bajaj Auto. So I would put my money over there in the two-wheeler space.
That's the story with the two-wheelers. Some news coming in on REC. Harsh Baveja has been brought in as Director of Finance. Remember, REC and PFC both having a good day. PFC specifically, and we spoke to PFC also today on the channel. But all in all, it's definitely the day for public sector companies across the board. You're seeing that kind of a move there. Not so much for banks, and a bit of weakness there. Leading with, I would say, HDFC Bank, still about 1.5% down. Nirav, why the sulk, you reckon, for banks? And, is this a good time when we're talking about the up move expected post-election dust settling, etc.? Would banks be a great space to position yourself in?
Well, at this point of time, the FII sentiment is negative in the market, and I think this has a direct correlation with the private sector banks. So I think private sector banks would continue to be under pressure for the time being. But I think if the FII sentiment were to change, then I think the private sector banks could get an upside potential from here.
Okay, so that's the verdict. And Nirav, before we thank you, one of the stocks that's really gotten beaten down. Now, it is a traditional favorite, but HDFC Bank has been sulking for the last few days. Would you use this weakness to buy, or are there better investment bets elsewhere?
Definitely will look at buying, adding in small quantities. Yes.
Why, Nirav?
Because the potential is there, the fundamentals are intact, and I think it's only a question of time before things settle down.
Okay, Nirav, we'll leave it at that. Aditya, thank you so much for taking the time out and being with us as well. Actually, Aditya, before I thank you very quickly, can I just take a technical view on HDFC Bank? It's the top loser today.
I was waiting to give a view on HDFC Bank, so thank you for that. Look, technically, I think HDFC Bank looks very weak. There are certain factors which make this counter as the most bearish bet right now, which could pull Bank Nifty down. FI holding is continuously decreasing, and retail holding is continuously going up. Second, technically, it's now for the first time trading below a lot of important moving averages. So this makes an ideal candidate for a good breakdown. I think probably HDFC Bank could again test levels of almost 1360 to 1300. So we are very, very bearish on HDFC Bank from a medium-term point of view. Although there could be a spike, in event of election, etc., there could be some spikes, but that would be short-lived. But in the medium term, stock looks well poised to go down.
Point well taken. Divergent views there, but that's to be expected. Thanks both of you for joining in. Less than a minute left for the markets to shut shop. Let's start wrapping up. Get the Nifty heat map up because the indices are flat. So we know that the indices haven't done too much. The heat map before Tamanna rounds up the mid caps and the small caps. Almost even Stevens. Tata Motors is the top loser now. So clearly autos have a pain point today. Tamo, Bajaj Auto, Eicher, all three in the red. HDFC Bank is the one which is the principal culprit. And the top 10 losers are losing less than 2% but more than 1%. Gainers, Coal India, 4% higher, eclipsing Cipla. But BPCL has moved up. And Airtel, as the course of the con call has gone on, has moved up about 2.5%. There is also strength in Power Grid and NTPC, Tamanna. So a bit of a PSU flavor here.
Absolutely. PSUs actually are the ones making the moves, and it's not just with Coal India and BPCL. If you look at the broader markets as well, and the Nifty PSU index, the CPSE, that's where all the action lies. I just want to quickly pull up what's happening with the mid-cap and small-cap indices as we wind down to close. And, of course, Nifty CPSE there. Looking very good. Mid-cap 100, okay, about 1% up. More action actually in the micro-cap index if you take a look at it, and that's where you're seeing some big moves coming in, about 1.5%. But what is moving today? And we should pull up the constituents of the Nifty CPSE because you'll see LIC there, you will see a whole host of companies. LIC there nearly 7% up, very sharp move. That's because of the reprieve they've got from SEBI for 3 years. They've got 3 years to bring their public shareholding up to 10%. Coal India, Power Finance, BPCL, HPCL, all of them doing exceedingly well today. I just want to pull up the top gainers and losers on the BSE 500. That will also give you a sense of what is happening today. ITI, I could not figure it out. Very little public float in that company. And no real immediate news trigger, but definitely even some volumes will move that. Thermax is a story of the MSCI inclusion that we've been talking about. LIC we talked about. Colgate, to me, Niraj, was the big surprise today. Hammered 5% on what was otherwise looking like very good numbers. Devyani International on the back of brokerage reports. Archean Chemicals not doing too well after the Q4 results. Bharti Industries, again, a UBS note today, which is not too hot on chemicals, weighing that down. And these were really the pieces that hurt the most, isn't it?
Yeah, most certainly. I mean, that sums up really But interesting moves, a day of consolidation with a flat close. Let's see what tomorrow holds in store. Remember, the next 2 days are busy from an earnings perspective as well. So we'll keep you updated with all of that. But for now, from Tamanna and me and the team that put this show together, thanks so much for watching.
welcome to Earnings Edge. This is Rucha Somaya, and today we have with us Mr. Ashish Rai, the CEO of Orian Pro Solutions. Welcome to the show.
Hi, good afternoon. Thank you for having me.
Thanks, sir. So, a pretty great earnings this quarter. So, firstly, I would want your take on how the earnings were.
Yeah, so we delivered at the high end of our guidance of 30 to 35%. So we basically delivered what we said we will deliver. It is the third year in a row that the business grew in excess of 30%. So we feel good about the growth momentum. And we delivered margins. We've been guiding to a EBITDA between 20 and 22 and a PAT between 15 and 16, and that's exactly where we came in. Right. So all in all, the team delivered pretty strongly to come in at the high end of the guided range.
Sure, sir. Right. So the margins are pretty strong and in line with the stated guidance. So what's your outlook?
Nifty and the Sensex halt three-day gaining streak as heavyweights, such as after a tepid session of trade. Broader markets outperform the benchmarks. FMCG index ends as a top sectoral gainer. SEBI eases KYC norms for mutual fund investors. Those who have not linked their PAN and Aadhaar will no longer be categorized as KYC on hold. Instead, they will be brought under KYC registered if that's the only discrepancy. SBI hikes rates for retail term deposits by 25 to 75 basis points for short-term maturities. Analysts say liquidity could be the key reason. Prime Minister Narendra Modi arrives in Mumbai. He will be holding a roadshow in Mumbai's Ghatkopar tonight and will also address two campaign rallies in Nashik and Kalyan. India's trade deficit widens to $19.1 billion. Exports rise marginally to $34.99 billion versus an year ago. Hello and welcome. You're watching The Reporter on NDTV Profit and I'm your host Pallavi Nahata. As always, the show aims to bring to you market headlines along with national and international news. As we kick off the show, let's take a quick look at how the markets have fared during the day. My colleague Niraj Shah joins us for a quick market wrap-up of all of the action on the D Street.
Well, consolidation if you look at the large caps, but strong performance if you look at the mid cap and the small cap indices. In fact, those two ended very well. So you could almost argue that for individual portfolios, it was a very good day of trade. The Nifty heat map will not show you a dramatically strong advanced decline. If anything, it was even Stevens, maybe a bit more red than otherwise, with autos sulking in trade. So Tata Motors, Bajaj Auto, Eicher, all three of them down. Asian Paints corrected too, but the star loser of today's session, maybe you don't call them a star loser, but the key loser was right here. HDFC Bank, 1.3% higher, the top drag on the markets today. So that was what happened when it came to the large caps. Autos, HDFC Bank and some others like Asian Paints. What gained were PSUs. PSUs did really well. The top gainer was a PSU, Coal India. There was a BPCL. There was NTPC. Very strong show by each of these. SBI chipped in with its gains as well. Cipla, the stake sale by the promoters, digested well. The strength in BPCL and Bharti Airtel ended nearly at the day's high after the con call. So pretty strong showing there by some of these names. The BSE 500 gainers and losers will come up and you will see a distinct flavor of brokerage reactions or brokerage note reactions and result reactions. So there was some strength in Thermax. Sorry, this was the MSCI. That's the third one I should have added. But the MSCI addition and weighted change, this one about 8%. Timken post-results reaction. LICs had a good move today. There was some strength in Hitachi and ITI as well. And on the flip side, Colgate, a results reaction down about 5%. There was weakness in RT because of a UBS note. Weakness in RKN because of a results reaction, as also Devyani. So in some sense, these stocks didn't do as well. There were two new listings too that came out, and Home First, which had an okay kind of a move, but 5% higher after starting off in the red. Listing in the red, ending 5% higher. But TBO Tech with that massive oversubscription, seeing about an over 50% debut, and stayed this way for a better part of the trading day, so which was actually a good sign. All in all, broader markets ruled the roost today. Let's see what tomorrow holds in store.
SBI hiked rates for fixed deposits by 25 to 75 basis points for short-term maturities. My colleague Mimamsa Verma joins us with more details. Mimamsa, what are the rate hikes like and what are the reasons behind the move?
Yeah, hi Pallavi. So SBI today has raised its deposit rates, the fixed deposit rates by 25 to 75 basis points for deposits under 1 year tenure. For general public, the rates range from 3.50 to 6.50, and for senior citizens, the deposit rates are at 4.00 to 7.50%. For both of these categories, the rate on 3-month bucket were increased by 75 basis points. So this is the largest hike that SBI has done across maturities. Now this is to attract depositors in the short-term buckets as banks are struggling with tight liquidity in the banking system for a while now. As on May 14th, the liquidity deficit in the banking system stood at rupees 1.5 lakh crore. This is because banks increased their cash balances with the central bank to 9.83 lakh crore rupees, and banks have also sharply increased their parking under RBI standing deposit facility to rupees 1.01 lakh crore. One of the other reasons that analysts are citing is that the expectations that the Reserve Bank of India is going to cut rates at all this year has also led to this move. The impact of liquidity tightening is evident if you see the call money market rates. The interbank call money market rate stands at 6.55%, which is higher than the repo rate at this point of time. So while other banks are also expected to follow suit, analysts are a little surprised about the timing of the hike in term deposit rate, because the credit demand in the first quarter is usually dull. So now we have to see if other banks are also going to hike term deposit rates, or they might want to wait it out for a while.
Right. Thanks a lot for that, Mimamsa. And moving on from banking to the telecom space, Bharti Airtel has said that the industry needs tariff repair. On a company con call, MD and CEO Gopal Vittal told that ARPU will remain lower than the global, even if it reaches 300 rupees. Let's go across to my colleague Smriti Chaudhary for more on what the management said. Smriti?
Bharti Airtel's con call happened, and Gopal Vittal, who's the MD and CEO of the company, spoke at this con call. There are a couple of highlights from this con call. One thing that he pointed out is the mobile churn that reduced for the company this time from 2.9% to 2.4% on a quarter-on-quarter basis. They said that they identified 20 to 25 potential factors that affect this churn, and they took action in the last 5 to 6 months to reduce this churn. Another thing that he pointed out was that there was a decline in the network cost in this quarter, and this is only the second time in the history of the company that something like this has happened. He said that they looked at the cost structure of every single site and put together a plan to optimize that cost. He also spoke about the need for a tariff repair, and they say that the tariff hike needs to happen industry-wide, and even if the ARPU, which is currently 209 for Bharti Airtel, reaches 300, that is still lower than the global peers. Now, he also spoke about additions of 5G customers. So as of March of 2024, there are 72 million 5G customers for Airtel. There's an addition of 2 to 2.5 million customers in 5G every month. Vittal also pointed out that the pricing, for the architecture of pricing of the industry is broken. He says that people who can actually pay more end up paying lower, and this is because of these unlimited plans that the industry offers. And he said that if that changes in the next couple of years, he would be on board with that. So these are a couple of highlights from the con call.
Thank you so much for that, Smriti. Moving on, in what comes as a relief for mutual fund investors, SEBI has eased KYC norms. My colleague Alex Matthew joins us with the latest. Alex, what are the relaxations like?
A clarification coming in from the Securities and Exchange Board of India via a circular that was sent out last night. This relates to the KYC norms pertaining to mutual fund investments. Now, remember, quite a few changes came into effect at the start of the current financial year, that is at the start of April, where based on the documents that you have given in the KYC process for mutual fund investments, you would be categorized under one of three categories. In the first category, that is on hold category, if you have not updated your mobile number or your email ID, or at that moment if your PAN and your Aadhaar was not matched or linked, or in fact if there were any other discrepancies in the documentation, then you would be classified as on hold, in which case you would not be able to transact in mutual funds at all. If there was not a validation of Aadhaar, then you would be categorized as registered, in which case you would be able to transact, or you are able to transact in all of the folios that you are currently invested in, but you would not be able to make fresh investments in mutual funds that you have not invested in yet. And in the third category, if you have validated your Aadhaar and if your Aadhaar and PAN are linked, then you would be validated and you would be able to transact as normal. Now, in the latest update, what they have said is that whereas previously if your PAN and your Aadhaar was not linked, you would be on hold. Now, if that is the only discrepancy, you would be classified as registered, in which case you would be able to transact in all of the folios that you're currently invested in. However, in order for you to be validated, you would need to complete the linkage of the PAN and the Aadhaar.
Thanks a lot for that, Alex. And with that, let's have a look at some of the macro data that's been published today. India's merchandise trade deficit has widened in April because of a sequential decline in exports that's outpaced the fall that took place in imports. Now, the trade gap has widened to about $19.1 billion for April. That's compared with a deficit of $15.6 billion for the previous month. This was according to data that was shared by a government press briefing that took place earlier today. Exports rose 1.1% annually to about $35 billion, while imports increased about 10.3% annually to $54 billion. This is for merchandise trade. Now, on a sequential basis, exports have actually fallen by about 16.1%, while imports have fallen by about 5.6%. In the last fiscal, India achieved the highest ever trade figure. That's what Commerce Secretary Sunil Barthwal said at the press briefing. He also said that the new financial year has started off on a good note, and there is hope that the good start will continue as growth rates are improving in the Western world and inflation is actually declining. On to an IPO update. Virat Kohli backed Go Digit Insurance IPO worth 2,614 crore rupees has opened today. The overall IPO led by retail investors was subscribed 0.3 times. The retail portion was oversubscribed at 1.2 to 5 times. Moving on to Haldiram Snacks, a global consortium of investors has submitted a bid to buy up 76% stake in the company. This may be the biggest private equity buyout in the country. Sesha Sen joins us with more details on this. Sesha?
India's largest snacks company, Haldiram, is up for sale. A consortium of global investors led by world's largest private equity firm Blackstone is eyeing a controlling stake in Haldiram Snacks at a valuation of $8.5 billion. Now, should the deal materialize, this would make it one of the largest private equity buyout in India. What we know so far is that Blackstone, along with Abu Dhabi Investment Authority and Singapore's GIC, have submitted a non-binding bid last week for up to 76% stake in Haldiram Snacks. This is the combined snacks business of the Delhi and Nagpur factions of Haldiram's family. However, a key important point to note here is that as part of a plan approved by NCLT, a merger is underway for the snacks business. It should take roughly around 3 to 4 months to complete the merger, and any potential deal can happen only after that. Again, this is not the first time that Haldiram is looking to sell its business. Earlier, even private equity firms and even the Tata Group has held discussions for a majority stake. However, the deal talks fell through, likely due to valuation concerns. Going forward, the current talks are at a very early stage. We will be monitoring the space and bringing you all the latest updates on this major development.
Thanks a lot for that, Sesha. Moving on, in a latest statement issued by the IMD, a fresh spell of heat wave is likely to commence over the northwest India from the 16th of May and East India from the 18th of May. The wet spell with isolated heavy rainfall accompanied with thunderstorms, lightning and gusty winds is very likely to continue over the South Peninsular India till the 20th of May. With that, it's time to slip into a short break, but on the other side, we bring to you the latest updates from India's political landscape. Stay tuned. Welcome back. You're watching The Reporter on NDTV Profit. Prime Minister Narendra Modi is set to hold a roadshow in Mumbai's Ghatkopar, the same venue that saw a devastating hoarding crash just 2 days ago. Strict traffic guidelines have been issued for this 2.5 kilometers long roadshow, which is scheduled to begin at 8 p.m. today. My colleague Akshay from NDTV Marathi joins us from Ground Zero. Akshay?
Narendra Modi will participate in his first roadshow, very first roadshow of Narendra Modi, and Narendra Modi will come here at sharp 6:45. There is updation in timing of Narendra Modi. Narendra Modi will come here at sharp 6:45 p.m. After coming here, he will offer the gratitude and the flowers to the statue of Chhatrapati Shivaji Maharaj, and then the roadshow will proceed. This roadshow will start from the location where we are now, now. This is the Damodar Park of Ghatkopar West, and this roadshow will cover the 2.5 kilometer rally, which will conclude at the Parshvanath Chowk, which is at Ghatkopar East. The huge number of police personnel have deployed for the safety and security of this roadshow. The number of barricades, number of metal detector gates are also installed on the road for considering that the huge and massive crowd will gather enthusiastically for this rally. One more thing, it has to be this road show is organized in the constituency of BJP candidate Mir Kotecha, but it has said that this road show is for all Mahayuti candidates, and it has to be, now it will be needed to see that how this road show will impact on the voting for the Mahayuti candidates.
Thanks a lot for that, Akshay. And moving on to NDTV's special election coverage, the focus is on Hooghly today. A star-studded battle for the riverside city is on the cards as the BJP is fielding Lockit Chatterjee against the TMC's Rachna Banerjee. The left, however, says that it remains unfazed by the star power. My colleague Saurabh Gupta joins us with a ground report. Saurabh?
Rachna Banerjee has been handpicked by Mamata Banerjee to take on Lockit Chatterjee, the BJP candidate in the seat. And her popularity as Didi number 1 is something that the Trinamool Congress is banking on to defeat Lockit Chatterjee, who is the incumbent MP and won last time, defeating the Trinamool Congress. But Rachna Banerjee, of course, is also hitting the campaign trail to ensure that she can take on her opponent through garnering votes and closing in on the gap that was there last time in 2019. It's a star-studded campaign in Hooghly near Kolkata. Lockit Chatterjee versus Rachna Banerjee. Rachna Banerjee, an actor and one of the most popular TV show hosts in Bengali television, the host of Didi number 1, has a clear fan base.
Rachna Didi number 1 kore eto popular. Oto daratei chaichilo na. আমি ওকে একদিন বললাম, আরে রচনা চলো না, চুচুড়ায় দাঁড়াও না। বললো, দিদি আমি কোনোদিনও রাজনীতি করিনি, আমি কিছু বুঝি না, আমরা তোমায় কিচ্ছু বোঝবার দরকার নেই। আমরা কেউই বুঝতাম না, মানুষের কাজ করব বলেই আশা।
आई एम ऑलवेज अ वुमेन सपोर्टर। इसका मतलब ये नहीं कि मैं पुरुषों के साथ सपोर्ट नहीं करती हूँ, but definitely the women supporters are always there with me and they love me immensely. And they are blessing me always, so it is a positive sign, definitely.
When Rachna Banerjee's candidature was announced, memes from films in both Lockit Chatterjee and Rachna Banerjee worked in went viral. The left candidate is unfazed with the attention on two high-profile women candidates as the CPIM tries to win back some of the votes it has lost to the BJP.
আমাদেরকে খেটে খাওয়া মানুষের লড়াইয়ের মধ্যেই আছি। নির্বাচন একটা রাজনৈতিক সংগ্রাম, সেই সংগ্রামে আমি একজন প্রার্থী, ফলে আমার কাছে এটা নতুন কিছু না। আমাদের পশ্চিমবাংলার ক্ষেত্রে আমাদের পার্টির বক্তব্য হচ্ছে তৃণমূল এবং বিজেপি এই দুটো শক্তিকেই পরাস্ত করতে হবে। এই দুটো শক্তির বিরুদ্ধে যারা রাজনীতি করতে চান, যারা লড়াইয়ে নামতে চান, তারা সবাই স্বাগত।
Lockit Chatterjee, however, says her focus is on corruption. She adds that issues like Sandesh Khali have had an impact and will draw women voters towards her.
TMC, corruption and corruption, माफियागिरी, सिंडिकेट बाजी, तोलाबाजी, कट मनी और नारी सुरक्षा। ममता बनर्जी महिला के संदेश खाली में विरुद्ध में बोल रहे हैं, महिला के विरुद्ध में बोल रहे हैं।
Lockit Chatterjee won the seat in 2019 as the BJP performed well, and this time around too she expects to defend this seat and keep it in the BJP tally itself, which is why in this context her campaign becomes very, very interesting. And if you see, she's not taking on her opponent, more or less she's taking on the party of her opponent and also using her party, her prime ministerial face, Prime Minister Narendra Modi's image to campaign against the TMC here in Hooghly. With camera person GD Shankar, Saurabh Gupta, NDTV.
And with that, it's time to wrap up today's show. But before we do that, here's what to note. One does not have to be born with disability. Disability, whether it's temporary or permanent, can come into our life at any point in time. It can be the result of an illness or an accident or because of an age-related factor. And that is what happened with Anup and Nehal. The Samarth by Hyundai initiative, in partnership with NDTV, is focusing today through their story on mobility and how, with adaptations and a little thought, disabilities need not restrict the lives we lead.
I was on the passenger seat and the car just went off the road, and because of the height, the impact was on my spine. But when they took an X-ray, they realized that my spinal cord had fractured, and due to that, there is a paralysis below the waist.
40-year-old Anup Chandran and 36-year-old Nehal Thakkar have been married for over 6 years. They met while they were both recovering from near-fatal accidents.
अभी मेरा एक्सीडेंट अभी 2003 में हुआ था, निहल का 2005 में। बोथ हम लोग दोनों का तो कार एक्सीडेंट था। तो इट वाज ऑन ये जो पाम बीच रोड है, पाम बीच रोड पे न्यू बॉम्बे में एक्सीडेंट हुआ था, जिसकी वजह से हमें स्पाइनल कॉर्ड इंजरी हुई थी। डेट्स हमारे कोइंसिडेंटली सेम थे और हमारे व्हीकल सेम थे वो टाइम पे। तो जो हमारा कनेक्शन पॉइंट था बिकॉज ऑफ ये इंजरी एंड कॉमन फैक्टर्स जो आए हमारे एक्सीडेंट में।
Today, Anup and Nehal look back on a difficult time, coming to terms with a new way of life and a new identity as wheelchair users.
It took time. No, honestly, it took time, but we have to realize that any situation you have to come out of it. If you get stuck to that, then you will not move forward. So first 2 years.
First 2 years, हम लोग ने इतना rigorous physiotherapy किया कि there was a hope कि अगर इतना वॉक करेगी नेल तो मसल्स तेरे स्ट्रांग होंगे, मसल स्ट्रांग होंगे तो यू कैन वॉक। देन इनिशियली मेरे को रियलाइज हुआ कि स्पाइनल कॉर्ड में देयर इज अ गैप। मैं कितना भी थेरेपी करूँ, कुछ भी कर लूँ, बट एक मोमेंट पे आके आई हैव टू एक्सेप्ट कि ये दिस इज द सिचुएशन।
As working individuals, with Nehal running an event management company and Anup working at Standard Chartered Bank, both of them have considered various mobility options.
Independent होने के लिए I started finding out solutions. So I took a calipers which I wear on my legs to climb down. Then I modified my vehicle to move around the city.
Nehal and Anup got a hand kit fitted in their car to help them drive.
We had taken the cars from Hyundai, but ये modifications RTO approved होते, तो Hyundai ने help किया था हमें कि they took the vehicle to the person who was fitting it from RTO. उन्होंने फिटिंग कराई थी। हमारे लिए तो बेसिकली एक्सीलेटर और ब्रेक मॉडिफाई करना पड़ता था कि एक्सीलेटर एंड ब्रेक वी आर नॉट एबल टू यूज द वंस विच आर इन द फुट। तो हमारे लिए हैंडल बनाए थे, तो विच इफ यू पुल इट विल एक्सेलरेट, इफ यू प्रेस इट विल ब्रेक। So that is the main modification which was done, due to which I'm able to drive now to work and everywhere.
Anup and Nehal haven't let their disabilities or their environment disable them. And this is the advice they have for others as well.
I keep trying to push everybody, get your car modified, please start working. At least get out, you do your business or you work. जो भी करना है, but be visible in the society so that everybody can see this is possible.
The Nifty and Sensex halt the three-day gaining streak after a tepid session of trade. Broader markets outperformed the benchmarks. The FMCG index ends as the top sectoral loser. SEBI eases KYC norms for mutual fund investors. Those who have not linked their PAN and Aadhaar will no longer be categorized as KYC on hold. Instead, they will be brought under KYC registered if that's the only discrepancy. SBI hikes rates for retail term deposits by 25 to 75 basis points for short-term maturities. Analysts say liquidity could be the key reason. Prime Minister Narendra Modi arrives in Mumbai. He will be holding a roadshow in Mumbai's Ghatkopar tonight and will also address two campaign rallies in Nashik and Kalyan. India's trade deficit widens to $19.1 billion. Exports rise marginally to $34.9 billion versus last year.
Hello and welcome to Earnings Edge. This is Rucha Somaya, and today we have with us Mr. Ashish Rai, the CEO of Orian Pro Solutions. Welcome to the show.
Hi, good afternoon. Thank you for having me.
Thanks, sir. So, a pretty great earnings this quarter. So, firstly, I would want your take on how the earnings were.
Yeah, so we delivered at the high end of our guidance of 30 to 35%. So we basically delivered what we said we will deliver. It is the third year in a row that the business grew in excess of 30%. So we feel good about the growth momentum. And we delivered margins. We've been guiding to a EBITDA between 20 and 22 and a PAT between 15 and 16, and that's exactly where we came in. Right. So all in all, the team delivered pretty strongly to come in at the high end of the guided range.
Sure, sir. Right. So the margins are pretty strong and in line with the stated guidance. So what's your outlook on FY25? Do you still expect to stay at 35% level, or how do you look at that?
Yeah, so look, I think we've been now growing at between 30 and 35% for the last 3 years. I think we feel good about continuing that growth trajectory. Our guidance for 25, our planning number is between 30 and 35. And we intend to keep EBITDA between 20 and 22 and PAT between 15 and 16. So, essentially, we more or less stick to the trajectory, and we continue to scale the enterprise to meet the demand. There is a really strong demand for quite a few of our offerings out now. So we need to see that we continue to scale to keep delivering the growth numbers that we are committing.
So margins will likely be flat around this range, is it?
Yeah. So look, I think our model, at least over the medium term, is in the software business, the economics, of course, improves with scale. So overall, you are delivering that much excess EBITDA, but then we are the size of the opportunity in front of us is so large that our communication to the shareholders, to the investors, has been that we will try to keep EBITDA at the level between 20 and 22. We believe that is a good level to be. You probably in the top 5% of Indian tech at that sort of EBITDA level. So we believe, the Orian Pro shareholder is pretty pleased with that performance. And as the economics improve, we pour the excess back into increasing the size of the R&D budget. We invested which we expense out all of it, right? So I think last year we invested almost about 80 odd crores in R&D. This year, FY25, that number will probably go up to about 100 odd.
Sure. Talking about the excess cash, you've declared a 1:1 ratio of bonus, and I think that's what the street is pretty happy about. Apart from that, you have declared dividend as well this quarter. So, how do you expect to utilize your cash going forward? So as you rightly mentioned, you'll likely invest the cash into the business again and expand the R&D budget, or do you have a certain percentage in mind to give back to the shareholders?
Yeah, so look, we've upped the dividend payout from last year to this year has gone up 100%. So of course, we've increased that. I think the right investment for us in terms of the excess capital in the enterprise is to pour it back into product, into technology. That is where we believe we create the long-term value for the Orian Pro shareholder. So we'll keep paying, of course, we intend to keep paying dividends and all, but bulk of the use, I would split it this way. I think we've been doing M&A. We will continue to deploy some capital towards M&A. I think in the last 6 months, we've done 3 M&A that we've announced. We probably, if we find more opportunities, we'll continue to deploy some capital there. And then we'll continue to deploy capital in the organic growth initiatives, which is mainly R&D, as well as, expansion of the fixed assets that support the staff. The staff numbers have also been going up quite significantly.
Right. Talking about your inorganic expansion, that also has been stellar, with the recent acquisition of Arya.ai. So any sort of budget that you are looking forward to have in inorganic expansion, or will you analyze the way it comes to you?
So the way we look at it is the following, right? I think what we do is we have identified the bets that we are making, right? So there are a few primary bets in specific sectors, which is in banking, in transit payments, and on the enterprise side, right? Where we say this is a segment we operate in, this is the transformation opportunity that we are going after. For example, the transformation in the corporate banking space, the closed loop to open loop transformation, right? So we've identified the levers. We say there's a demand runway that's long out, and we have a strategic blueprint of where we want our solutions to be, which of course has a number of gaps. Right. So where there is an opportunity for us to acquire an asset with the right kind of IP and the right level of team, which fills a gap in our strategic blueprint, we will deploy capital for that M&A. Otherwise, we don't really have, a lot of FOMO when it comes to deal making. We don't go out looking for M&A, but there is always a buy versus build choice, in terms of fulfilling that strategic blueprint, right? And so if we find an opportunity, we'll continue to do that.
Right. Got that. Now, let's talk about Arya.ai. You expected the acquisition to get completed by 15th of May, as per the press release. So how has the progress there been?
Yeah, so I think we've broadly been on track on most of the things. We've been working with the teams in terms of integration. I think the bigger job there, other than the regular formalities, is to bring together Orian Pro's deep expertise in the building of enterprise applications and the presence on the banking side especially, and Arya.ai's highly mature framework as well as capabilities on the enterprise side, to bring it together to help banks, to help insurers deploy AI at scale where they do their business processes, right? So one end, of course, is all the Gen AI talk that I think you hear as much as we hear, but I think bulk of the value creation for any technology, not just AI, happens on the application layer. That is where we are very, very good. That is where the banks run their mission critical applications to run their business processes. And that is where, we are bringing the teams and the solution sets together to make the impact, at every point on the workflow. Can I deploy, a fully autonomous agent, a blend of rules and ML, a human assisted by an automated agent, right? And so that the banks and the insurers actually get that benefit from AI, right? So I think that's where most of the effort is going in. We feel pretty pleased with how well we're progressing.
Right. So let's again have a look on the order book front. You had like 760 crore order book in the third quarter. What kind of order book would be in this quarter? Or as of this quarter?
Yeah, so I think we finished March 31st with an order book in excess of 1,000 crores now. And that's sort of, it's obviously at a record level for us. That together with the strength of the pipeline is what gives us the confidence in terms of continuing to grow at the level, right? The order book has been very, very strong.
Right. So, and you also mentioned that the large part of the 760 crore order book will be executed in the next 4 to 6 quarters, right? As on the last quarter. So is the conversion into revenue, I think that's the problem with the large IT companies as well. So do you still stick to that point where the deal wins are, expected to get converted in the next 4 to 6 quarters, or is the cycle a little elongated this time?
Yeah, so just the nature of how we declare our order books, which we don't really take in the long-term streams that come in, right? So for us, most of our business is deploying the application that we send, for example, where there is a license payment that comes in immediately. And then typically there are implementation projects that go out for that product, right? In terms of 12, 18 months. We normally don't have a lot of multi-year, we don't declare a lot of multi-year streams like, AMCs, etc. We just keep them, adding them every year, right? So for us, most of I would say 70 to 80% of our order book, assuming we have the capacity to deliver, would get converted over the next 12, 14 months.
Right, sir. So the recent deal wins have been around the bank and fintech sector, and you've been talking about growth and investment in that sector too. So can you just let us know what kind of revenue is coming from this sector in terms of percentage or any range that you can give for the banking and fintech sector?
Yeah, so look, the structure of a business, which is that you got two major divisions, banking and fintech. We finished the year, it's 53% of the revenues. And the technology innovation group, which does transit payments and the enterprise side, is 47% of the revenues, right? And the banking and fintech side has been growing. I think last year it grew about 37%. The TIG side grew about 33.
Right, sir. So talking about banking and fintech, one interesting point is amongst the software services and the banking and fintech segment, right, you have around 60-40 kind of breakup. So do you expect this kind of breakup to continue, or are you looking at more towards margin accretive businesses?
Sorry, the banking, between banking and the TIG side?
Yeah, the tech innovation side.
Yeah. So look, I think we will. What was happening is this, Rucha, right? I think last couple of years, banking was growing slower, and we were really deploying all our resources towards rebuilding the product set. Over the last 2 or 3 quarters, we finished our product build outs, and we've now been aggressively out in the market, expanding sales channels and actually selling. So we do expect banking and fintech to grow very, very strongly going into this year and into next year, right? So that will change the mix a little bit. By and large, I think we should stay in the, let's say, banking, between 50 and 55, and TIG between 45 and 50. It depends on the relative growth rates. Both these segments are growing very, very strongly, right? So it's hard to really change the mix in any sort of a short term.
Right, sir. So one last question again. Let's talk about the cash generation in the company. It has been very good, and I see that you have repaid around 36 crore of borrowings looking at the cash flow statement. So do you expect to be around like debt free in the coming quarters or years? What is your outlook on that?
Yeah, we are now totally debt free. So we, if you look at when we started the journey 3 years back in terms of pivot and all, I think debt levels were about 180, 200 crores. I think we repaid all of it. We're now in a mode where we don't need to really take on debt, but we need to make some very, very heavy investments just to capitalize on the sheer size of the opportunity in front of us is so large that we need to continue to make investments. But I think from a debt standpoint, we are we are zero right now.
Right, sir. Right. So very, very interesting insights, and congratulations on the good quarter, and thanks for joining us on the show.
Thank you.
Thank you, sir. That was Orian Pro. Stay tuned for more.
एक सेकेंड आई विल पुट wait oh my god, this, wait a second, this, so I can hear my voice from here.
Oh, then do that.
Yeah.
Okay. This, tuck this behind your jeans. Back.
ये फोल्ड कर लूँ मैं एक बार.
इसको टक करो पीछे.
हो गया ना?
OCD is killing me, but
कहाँ है क्या है बताओ. क्या करूँ इसको?
इसको नहीं इसको रहने दो ज़मीन पे. बस इसका छोटा सा पोर्शन जीन्स के पीछे पार्ट पे टक कर लो. So that does not come here.
Okay. मेरा फोन साइलेंट. कहाँ है वो? कुछ बोल ही नहीं रहे. हेलो.
ऑन है.
Yes, I can hear you. Can you roll it once for me to practice? Okay. ऐसे ही खड़ी रहो ना.
हाँ.
बाल सही है?
Yes.
Are you sure? रीशूट ना करना पड़े just because of my hair, because I'm poofy.
नहीं, it's fine. Salsa won't say anything. I'll go there in the PCM so I can see your frame now.
Okay. Yes. Yeah. अब ठीक है. Better?
Mm-hmm.
Hello and welcome to NDTV Profit. I'm Mimamsa Verma, and today was the day when Canara Bank released its earnings, quarterly Q4 earnings, wherein the bank reported an 18.3% rise in its standalone net profit to rupees 3,757 crore. Now, this was on account of increased net interest income or core income and a drawdown in provisions. On a sequential basis, the net profit of the bank grew 2.7%. I'm in conversation with Mr. K. Satyanarayana Raju, who is the MD and CEO of Canara Bank, to discuss the quarterly numbers and break down the numbers to discuss. Welcome, sir, and thank you for taking out time to speak with us. So my first question is about the provisions, because of which largely why the net profit has risen so much. The provisions have declined 20% year on year. However, on the sequential basis, the provisions increased by 30.7%. Now, what could be the reason for the sequential rise in provisions, sir?
The sequential rise in provisions is generally in the December quarter. You know that we have provided for our staff cost to meet that requirement of the bipartite settlement. We have provided almost 700 crores in the operating expenses, staff cost. But that's why we could not provide additional. Generally, whenever we have comfort in our balance sheet, we provide additionally to make it a future-ready balance sheet. We do additional provisioning beyond the requirement of the regulator. When we got a comfort in the current quarter, so we, instead of 750, we required to provide only 350 crores in the staff cost to complete that wage revision payments. And the remaining, whatever excess we got it, we have provided as an additional cushion in meeting the requirements of beyond the regulator requirements in one or two big accounts, so that in future any eventuality that can be used for the matching that requirement. That is the purpose. Otherwise, nothing. There are no concerns in the slippages, and there are no concerns in the stress or anything. Let me clarify to you that our SMA 012 is sequentially as well as year on year it has come down. The sequentially, if you see that it has come down from 0.80 to 0.69%. Even year on year, if you see that it has come down from 0.76 to 0.69. You can find out even each SMA 0, SMA 1, SMA 2, there is a reduction both in the accounts and the amount. That is helping, that is giving a confidence for us, and the next year, the current 4 quarters, we will continue that what the last year we maintained that our slippages will be less than our recovery and upgradation. If you see that the March month also, our recovery and upgradation total together it is 3,680 crores, whereas the slippages are only 3,400 crores. And we continue to do every quarter like that. When we have a cushion in our balance sheet in the bottom line, we want to provide additionally. So that additional provisions, it will be useful for the future. Any unexpected events are there that will take care of that. This quarter also we have provided 300 crores additionally in certain NPA accounts where it is beyond the requirement of the regulator.
Okay. So 300 crores is what you have set aside for some particular large accounts, is it? If you could give us a sense of which sector accounts are these accounts are from?
See, actually, last year only one big account has slipped to NPA. We provided in that account, but sharing the name of the borrower is not correct from my side.
Okay, no problem.
But it's only one account it is slipped, and that account only we made that additional provision.
Okay, no problem, sir. So your credit growth and deposit growth both has risen 11% year on year in Q4, which is more than the guidance that you had provided in the last quarter. And on the media briefing call as well, after the results, you had said that you are conservative in the guidance that you give for the next quarter. Is there any specific reason for that, and what is your growth targets for this year?
You see that historically, last 3-4 years, this bank follows the same board on the board along with the top management. Then when we express to the guidance, we give little conservatively the guidance, but we don't want to miss that guidance when we give something. We want to be as realistic as possible, but our performance always, if you see that we are outperforming our guidelines. The last year also we are given guidance at 10%, though we are rejigging our corporate portfolio with replacing with low cost or low yielding advances with high yielding advances. Even then we could show 11.34% credit growth. This year also, why we are given the conservatively, it is not that we are expecting some slump in the credit demand or thing. We know that the credit demand is there, and we are the banker, we are getting it constant proposals, especially even in the corporate also. You see that our RAM has grown at 13.54%, and we are focusing more on the RAM because we have given our guidelines also that we want to reach 58% RAM so that our corporate will reduce it to 42%. And last year it has increased from 55 to 56%. So there where we focus, there the growth is there around 14%. So where we want intentionally we want to come down because our you know that our CASA is comparatively other banks among the peer banks, our CASA is low. So we have to manage our NIMs. Our portfolio we have to rejig it properly. We cannot afford to lend at a cheaper cost just for the sake of top line. So we are very calculative on that mind. That's why that the corporate is a little bit slow growth. We have shown that it is only 8.64%. But next year also, again, we are telling that demand is there because our TAT is our selling point. Double-digit growth we will see in the corporate also, and minimum 12% credit growth will be there, though we are given at 10%.
Okay. So your strategy going forward will be more like the lower rate loans will be curbed and you will be charging more interest for the new customers, is it?
Because, madam, actually, if you see that the last 6 months, the incremental deposit cost is very high. Especially in the March also, it has reached to the peak. Though our cost of deposit is at 5.5, if you see that incremental deposit, whatever we are garnering it at the last 6 months, it's very high cost. It's almost 6.75 to 7%. That is the range. At that range, raising the loans and maintaining the existing lending of 60-70,000 crores at 6.9 to 7.15% is not at all feasible for us. But at the same time, we cannot replenish entire 70,000 crores with high yielding advances. So we have to see the quality of the advances also. That's why gradually we are negotiating with those borrowers. If they come up to our expectations or appetite level, we are retaining that exposure limits. However, wherever they are not comfortable, then we are reducing our exposure limits 40%, 30%, 50% like that. But we are continuing our dealing with them. That's the reason actually we are able to maintain our NIM at a 3 point. The last quarter sequentially, if you see that our NIM was 3.07. But year on year also, if you cumulative figure, if you take it, last year it was 2.95 and this year it is 3.05, 10 basis point up in the NIM. Whereas the industry has seen that there is a steep fall in the NIMs. Whereas we are successful in maintaining that. That is because only we focus more on the high yielding so rejigging and all, not just like that top line to show the top line growth, we are not compromising on the price. If you see the exact figures in the December quarter, the cost of deposit incremental increase is 8 basis point. Whereas the incremental yield on advances, incremental improvement is 11 basis point. Though you know that the March was very tough for rising the deposits, our cost of deposits have improved only 8 basis points. but our yield on advances has given us 11 basis points. That's why our NII also has improved, our NIM is also improved in the fourth quarter. We are very constantly monitoring that matter.
Okay. Okay. Because we're talking about credit and deposit growth, what are your thoughts on RBI's recent draft guidelines on project finance? Do you also think that 5% is too high for making those provisions on project finance?
No, actually, this may be in the process of making the industry familiar with the India's requirements or expected credit loss requirements. Maybe in the stage wise they are making us familiar with that. We know that these things will come exactly. We don't know that they will give the 5% and all, but we know that in the coming years the provisioning requirements will be higher because the banks are also doing very well and they have comfort in meeting that requirements. Even in the last December when the RBI has come out with increasing the risk weightage for the NBFC, we are the first banker. We renegotiated with all our existing borrowers. We got 95% of borrowers have accepted some burden. They shared with that. The same tempo will continue here also. Wherever it's a project funding is there, if that provisioning has come and if it is increases my burden either on the profit, NIMS, margins or on the capital side, we will go back to the borrowers. We negotiate with them, renegotiate with them. We are very much sure that we can convince our existing customers more or less 95 to 98%. So that may not be a big cause for us, and I don't see too much pressure on our bottom line or even a capital because of this. And this is a too early to comment on that guidelines, madam. It has come only 2 days back. A lot of discussions has to happen on that. And even within the bank also, our risk department as well as corporate credit department are assessing that individually. And once they reach to certain things, they need some clarifications from the regulator, like what is the floor limit for this project for providing the provisions and all. That clarities are not there in this draft guidelines. So once we get that, then we will assess actually. And I don't see too much pressure, too much sensitivity on that. The reason behind is we are earning good profits. You see that the last year net profit was 10,600 crores. And current year net profits are 14,550 crores. Almost it is a 4,000 crores near to that incremental net profit we could earn in this financial year, even under such tough circumstances. When you have such a circumstance, there is a cushion in your balance sheet and when you are capable of earning internal accruals comfortably, for any small decisions, I don't think it impacts our balance sheet, either the capital side or the bottom line.
Okay. Okay. So will you be looking to raise capital going forward specifically for this project finance requirements?
No, madam. Let me clarify to you that at this moment our corporate, the CRAR is 16.28. This is the highest among all the peer banks. And our even core capital is also 11.58, which is a very much comfortable for us. And we don't have any plans in the near future to go for the rising the core capital. But we may go to the market for rising the AT1 bonds or the Tier 2 bonds to replenish whatever the maturities are there or to augment our capital in the form of AT1 bonds, subject to market conduciveness. And we are very much concerned about the pricing. Whenever we feel that the pricing is reasonable for us, we go for that. And this month, there is a board meeting. We are going to the board with our requirements. Hopefully, once the board clears, then we will share it with all of you.
Okay. Okay, all right, makes sense. So your SLR investments are in excess of 8%, and we all of us know what the liquidity conditions are in the system right now. So will you be deploying any excess SLR securities to shore up the liquidity and boost your growth?
Madam, incremental SLR investments, whatever it is there, the average yield is around 7.25. The extra XLR, what we have 8%. We have a windows from RBI to rise by using these, by pledging these excess SLRs, and we are raising the funds at 6.5, 6.75. It's a profitable for the bank. Why we will lose that opportunity? But if you compare the peer banks, our investments in the SLR securities in absolute number and both percentage wise is less than all the peer banks.
Okay. Okay. So my final question to you. so much is happening around technology spends and IT infrastructure, and there's a lot of conversation. And Canara Bank started its digital journey just 2-3 years back. So what is your sense on the IT spends going forward for the bank, and how much have you earmarked for FY25, and what will be the areas of focus for you this year?
See, 3 years back, I too will agree that we are little backward in the IT area compared to the peer banks. But now we can confidently say that whatever the 3 years we invested in the IT infrastructure and IT initiatives, we can say we are the one of the prominent PSU bank, which is technologically is very in advanced condition. Recently also in the January 1st, we launched our data analytics center and data lake center. That's a combined center. It's the first of its kind in the industry. And we are taking several initiatives. Last 3 years, we have invested on an average 1,000 crores every year. But now we feel that we have come to one stage that we matched with the market. We grabbed all the opportunities, whatever is there. Now our platforms are ready for launching anything. Our digital journeys are compatible with the customers. But at the same time, we want to continue the digital innovation even in the years to come, because we feel that the investment in innovations is a journey. It is not a one place to stop somewhere it is. So accordingly, the current year also we are proposed to invest around 800 crores. And this time our actual implementations will be based on next gen AI, madam, generative AI. And that generative AI we are focusing. I already have a preliminary discussions with the vendors, top companies in the world as well as in the India. And we are going for the RFP process and all those things. These things we want to improve our like a call center chatbot or even for the online transaction monitoring to see that the cyber crimes have been restricted nowadays, because the volumes of the digital transactions are increasing multifold. Just 3 years back, our digital transactions were around 94 crore per annum. But now in the March, we are seeing that in 1 month, we crossed that figure. So you see that absolute numbers in 1 year, last year, we have crossed 677 crores. So that is continuing month on month. When such a huge jump is there in the digital transactions, cyber security is an area that we have to invest heavily. That's why we created 1st April onwards, cyber security is as a special exclusive wing with 50 people and directly reporting to an executive director. And there we are investing it, and we want to use it, artificial intelligence and machine learning as much as possible, so that we can work on use cases. You can plug in when there are gaps are there. We are also working on shortlisting or the blocking of mule accounts, financial mule accounts. We are also working with RBI Innovation Hub for coming out of many new initiatives. Recently, we have launched RBI Innovation Hub and ourselves that we are the first banker to launch self-help group entire journey, whether it's opening of the SP account or internal lending or credit linkage, everything through STP journey. We launched it and we are the first banker, and we see huge tractions in that. So this type of innovations will continue, but maybe an investment may come down slowly, but we don't want to stop completely, because we want to be a first banker in any new initiative to take the advantage.
All right, sure. Thank you so much, sir. That's it from our end. Thank you so much for joining us on NDTV Profit.
Thank you.